I found this chart for you, which is very interesting because it will allow us to zoom out a bit on the market, especially in terms of price. Because actually, when we really zoom out, there's something that doesn't add up. That is to say, Bitcoin hasn't changed. The fundamentals haven't changed. If you have 0.01 Bitcoin, you still have 0.01 Bitcoin. And by the way, the dollar is really taking a hit right now. But on the other hand, those who hold it have changed. It's no longer the retail investors, it's the institutions. And that's a shame. It was the only asset that could still be owned by individuals. Let me remind you that just a few months ago, 69% of Bitcoins were owned by individuals. Then it dropped to 67%, and now we're getting closer to 60%, and we're going to analyze that. Because the supply structure is actually changing quietly. The institutions are not leaving the table. In fact, they're even strengthening their position. They're bringing in new players, whether it's banks that are entering the game and starting to accumulate, at the expense of individuals who are just waiting for one thing, for the price to drop so they can let go of their holdings. And the institutions, all they have to do is reach out like this to pick up cheaper Bitcoins. And this is a phase we were expecting during the bull run, saying, look, institutions are joining the dance, but at high prices. And right now, we're in a sale period, minus 50%. Speaking of sales, we've actually launched an offer. Since Bitcoin is down 50%, we've also made the annual offer 50% off. We've increased the monthly price to 39 euros. On Kojo, which is a platform that actually removes all the emotion, eliminates all the mistakes, because you have a very simple strategy with Kojo. Don't hesitate to give it a try. You can either have a monthly subscription with no commitment, or you can commit for a year at 267 euros. This is an offer that's exclusively limited to this video, so don't hesitate to take advantage of it. But actually, if we take a look at what's happening, we're not in a weak market. We're in a market that's in transition. I keep telling you this because, in fact, there's a decoupling between gold on one side and Bitcoin. Stay until the end, by the way, because I have an open question to ask you, and I'd really like to get your opinion in the comments. But let's start with an overview. Because in phases where the market doesn't have a clear direction, you need to zoom out. That's what I'm doing. Because the chart presents a strong idea. It's that investing in gold would be a bet against America. You know that the BRICS, you know that Russia, you know that China, Saudi Arabia have not stopped investing and buying, strengthening their position in gold since 2022. They've practically bought up all the gold in the world, which, by the way, is not limited like Bitcoin. At 21 million, we produce about 5% more gold per year, and we keep discovering it. But Bitcoin is limited to 21 million. There are only 20 million available, and by 2140, there will only be 21 million. But as I was saying, investing in gold is a bet against America. Investing in Bitcoin would become a bet for America. It's just a matter of conviction. It's just a matter of casting your vote. What are you voting for? Gold then is a vote against America. Or are you voting for Bitcoin, which aims to be the world capital of crypto? So why is that? Why do I say this? Quite simply because if Bitcoin goes up, the demand for stablecoins increases. And you know that the more stablecoins there are, the more treasury purchases there are. So all the treasury bonds that are used as collateral, because you know that, for example, Tether, which issues all its stablecoins, puts a massive amount of dollars as collateral, specifically to buy treasury bonds. And so the more treasury bonds are bought, the more interest rates ease. And the more interest rates ease, the less pressure there is on the national debt, which, as I mentioned to you in the daily update, keeps increasing. In any case, that's what's planned. It will keep rising unless precisely there's a rotation in the market. So we're no longer necessarily talking about an anti-system asset. We're potentially talking about an asset that is now integrated into the system. And precisely if the decline is actually due to macro factors, then the rebound could be as well. Because according to Grayscale, the recent drop in Bitcoin has almost mirrored that of tech stocks. You can see it clearly on the chart here. It's obvious. And it's all the high growth tech stocks. So it's not a crypto problem. It's a problem and a global risk movement off. That is to say, we're hitting the risk button to off mode. In other words, we're de-risking from the market. So assets that are considered risky, volatile, and especially those that are liquid 24/7. So Bitcoin is being treated like a high-value tech stock, a bit like an AI bubble. And we know there was a bubble, the internet bubble. We know there are always bubbles. Bitcoin, but if the driver of the decline is macro, then the rebound could also be macro. That's why it's important to look at the macro, to look at on-chain data, which we'll do in a moment, to also consider sentiment and not just focus on today's candlestick. We have a long-term view on the chain, 6 months, 1 year, 5 years, 10 years, not day to day. All right? We have a clear strategy and we don't deviate from that strategy. We don't change our strategy. And by the way, speaking of strategy, we have Coinbase, which met with about, in this very interesting interview, this Coinbase representative met with 130 institutional investors, whether in Hong Kong or in the United Arab Emirates. And actually, the question he asked was whether the current volatility in the market, so with Bitcoin front and center, calls your thesis into question. That is, your conviction that Bitcoin is the asset of the future. The answer is that not a single hand was raised. Yeah, everyone is convinced. Institutions, as you know, they think in cycles, 5 years, 7 years, 10 years, 15 years, 20 years. Some are taking advantage of the drop to strengthen their positions, while other investors, including those involved in mining, are doing the same. So this is typical, in fact, of an asset transitioning from a speculative market to a maturing asset class. I'm not even talking about adoption here, I'm just talking about maturation. And speaking of strategy, Michael Saylor announced that Strategy has bought an additional 2,486 BTC. And he claims one thing, that this winter for Bitcoin, and I agree with him, will be much shorter. It will be followed by a spring, and these are his words, a spring, then a glorious summer. And whether we like them or not, these kinds of players have been accumulating based on a long-term vision, and they've been doing so since 2022. I believe so. His average acquisition price is $76,000. Currently, it's $10,000 below $67,000. So, while retail investors are hesitating, the big players keep strengthening their positions. And we also have the president of the CFTC who stated that the crypto market structure bill is about, and I quote, about to be signed. So, the objective is clear. It's to lock in a pro-crypto legal framework for the long term. What does that mean? It means they want to avoid, in their words, a Gary Gensler 2.0. I don't know if you were around during that cycle when Gary Gensler was basically against everything crypto, but now we have an American president, Donald Trump, who is pro-crypto. We have a SEC chairman who is pro-crypto. We have a new CFTC chairman who is pro-crypto. And we're going to have a Fed chairman, a president of the Fed, who will also be pro-crypto, namely Kevin Walsh. All the stars are aligned, yet the price is dropping. Why? Because institutions are accumulating while retail investors are getting wiped out. We'll see this in just a moment, but that's exactly what the institutions want. They want predictability. They don't want a future where Gary Gensler comes in and destroys everything because Gary Gensler was anti-crypto. And on the surface, the price may seem low, but underneath, the infrastructure is becoming stronger. And the best information from a SIG is often about who holds the supply. We're going to talk about it now because, according to River, and I find this rather deplorable, I think it's a bit of a shame. For individual investors, in 2025, the structure of Bitcoin ownership has changed. We have companies here, we have funds, we have ETFs, and we have governments that keep increasing their positions. Meanwhile, individual investors have given up. They haven't just reduced their holdings, they've practically sold everything. So you should know that retail investors actually, they are very susceptible, very sensitive to emotions, especially short-term emotions. You know about risk aversion, the psychological impact that a red candle has compared to a green candle. If the candle is green, that's normal. If the red candle keeps staying bright red, that's not normal. And people will panic, people will sell instead of accumulating. And we also have entities that are structured, that have a long-term strategic allocation. And we can see it here. Businesses, companies, funds, governments, and we're only at the beginning. Now, that doesn't mean that Bitcoin can't correct. In my opinion, it could go visit slightly lower levels, but it does mean that the nature of the hands holding the supply is evolving. So either the cycle is actually stronger or the capitulation is the usual one and hasn't happened yet. And also, I was telling you a bit about some elements on-chain. We have the MVRV score, which specifically compares the market value to the average purchase cost. Historically, so the realized value. And if they tell you that the market isn't expensive or that the market is cheap, that is to say, with this indicator, historically, the best buying opportunities are formed when the indicator drops below zero and especially below 0.20. So that's the famous green zone right here. And in this cycle, actually, the lowest point reached so far is plus 0.26. So we haven't revisited this green zone yet. Maybe we'll revisit it, but we're in a pivotal phase. There's some euphoria. There has been a bit of euphoria, but we're in a state of extreme undervaluation right now. So now I have a question for you. Is this cycle, in fact, structurally stronger to the point where it no longer offers those classic capitulations? We're talking about a fairly typical 50 to 60% drawdown in the market here. Or have we simply not yet purged all the excess and will do so at a later time? Let me know in the comments, share your thoughts, and for the word of the day, let's go with anniversary. You'll understand why. See you tomorrow. And above all, if you want to have a clear strategy and not be ruled by your emotions, you have Kojo here. I'll put it right here for you. It's up to you, monthly, yearly, but most importantly, remove all sentiment, remove all emotion. Set up a strategy, build a portfolio. And with Kojo, you have this solution that I developed with my team. So take advantage of it. I'll also leave you with this video that talks about how there are many jobs that will disappear because of AI. It's a video with a rather unique format. Don't hesitate to check it out if you haven't seen it yet. If you've seen it, write the word seen and also leave me the little word of the day in the comments. I'll see you tomorrow for a new video. Until then, ciao.